Have you ever had that feeling, that you're being watched? Well, when it comes to your income, you're not wrong. Today, we are pulling back the curtain on 10, yes, 10 surprising ways HMRC knows exactly what you earn. We're talking everything from your main job right down to that little side hustle you thought was completely off the books.
And look, to make sure we get this absolutely spot on, this whole discussion has been put together with the brilliant experts at ProTax Accountant. They're going to be our guide through this, well, let's face it, pretty complex world of UK tax. So, let's dive in.
You know that feeling, right? It's like you're at the pub with your mates and you can just feel everyone's eyes on your wallet, waiting for you to get the next round in. That's kind of what it feels like when HMRC spots an extra pound you haven't declared. And trust me, they're getting unbelievably good at spotting it. And here's why they're looking so closely. This number, £46.8 billion, that is the UK's tax gap. It's the massive difference between the tax that should be paid and what they actually managed to collect. And HMRC is throwing some seriously clever technology at this problem to close that gap, which means for all of us, the stakes have never been higher.
So here's our game plan. First, we're going to look at the hidden data trails that HMRC has access to. Then we'll get into the digital footprint you leave every single day. After that, we'll cover the big stuff, investments and property. We'll wrap up by revealing the final high-tech net that pretty much catches everything else. And, most importantly, we'll talk about what you should do next.
Right, let's start with HMRC's hidden data trails. The best way to think about HMRC isn't just as a tax office, think of it more like a vast data empire. They have eyes and ears pretty much everywhere, from your boss's payroll software to your bank account. And just understanding that network is the first step to making sure you stay on the right side of them.
So let's kick things off with your everyday digital footprint. Honestly, these are the most common ways people leave a data trail without even thinking about it. And yep, they're the ones that catch most people out.
Okay, so secret way number one is something they call real-time information, or RTI. Now, what does that mean? Well, every single time you get paid, your employer sends all the details, your pay, tax, national insurance, straight to HMRC, instantly. It's great for accuracy, but if you switch jobs or you get a surprise bonus and your tax code is wrong, it flags a mismatch right away. A client, let's call him Mike from Sheffield, almost overpaid 1,200 quid in tax because a P45 from an old job hadn't synced up properly. It was RTI that caught it. And that brings me to a quick pro tip. Seriously, the single best thing you can do right now is go to the gov.uk website, log into your personal tax account, and just check your 2025-26 tax code. It'll take you 2 minutes. If you change jobs, had a pay rise, or have more than one job, this is absolutely crucial.
Secret way number 2, your bank account. It's basically a direct line to HMRC. You see, banks are required to report interest payments and can also flag large or unusual patterns of deposits. Let's take Lena, a van driver from Swansea. As you can see here, she had her main salary, but was also doing some freelance work on the side. HMRC's system saw these regular freelance payments hitting her account, noticed they didn't match her salary, and bang, a query was sent. The key thing here? They saw the income before she'd even filed her tax return.
So, what about that side hustle? You know, the little Etsy shop you run from your kitchen table? Or maybe you do a bit of Uber driving on the weekends. You think that's flying under the radar?
Well, think again. From 2025, there's a new rule. Platforms like Etsy, Airbnb, and Uber are now legally required to report your earnings directly to HMRC if you make over 30 sales or earn more than this number, just £2,300 a year. They send everything, your ID, your bank details, your total sales, and just like that, what you thought was a bit of pocket money is now sitting right on HMRC's dashboard.
Okay, next up, we're taking it up a notch. We're talking investments and property. So if you have a share portfolio, you get dividends, or you rent out a property, well, HMRC has some very specific ways of following that money trail.
Secret way number 4 is the dividend detector. Just like the banks, all the investment firms report every dividend payment straight to HMRC. Now, for the 2025/26 tax year, you get a $500 tax-free allowance, which sounds okay, but anything over that is taxed at your rate, and as you can see, that can add up fast. We had a client, Fiona from York, who got some dividends from a tech stock she owned. She just forgot to put it on her return, but HMRC's system flagged it against her bank feed, sent a query, and stopped a simple mistake from becoming a really costly penalty. So how does HMRC find out about that spare room you're renting out? That would be secret way number 5, the rental income radar. They literally do data swaps with the land registry to see who owns what property, and then they cross-reference that with local council tax records. So if you own a property but the council tax says you're not living there, that raises a big red flag. But look, instead of just being about getting caught, here's some real value. If you are a landlord, please make sure you're claiming all your expenses. Things like repairs, mileage, agent fees, they can make a huge difference to your final tax bill.
Now, if you thought maybe stashing some cash offshore was the way to go, I've got some bad news. Secret way number 6 is the offshore oracle, or as it's officially known, the Common Reporting Standard. Basically, over 100 countries have agreed to automatically share financial information about people who live abroad. So, HMRC gets a neat little annual report on any accounts you have overseas, making it, well, pretty much impossible to hide offshore income these days. This system has already helped them claw back £1.5 billion.
And secret way number 7 is the double check on pensions and benefits. The Department for Work and Pensions and all the pension providers share data seamlessly with HMRC. Let's take Grace, a freelancer in Edinburgh who also started drawing on her private pension. As you can see from the table, HMRC systems just automatically combine these two income streams, apply the correct Scottish tax rates, and figure out her total bill, all in real time. It's a perfect example of how connected all these systems really are.
Okay, deep breath. We've done the everyday stuff, we've done the financial deep dives. Now, we get to the really clever stuff. This is the final net. This is where HMRC uses its most advanced and, to be honest, its most surprising detection methods.
And number 8 is the one that gets everybody, the Instagram indicator. Yes, you heard me right. That post you made about your brand new car with the caption #HustlePayingOff, HMRC's AI is actively scanning social media for exactly that kind of thing. It's looking for a mismatch between the income you've declared and the lifestyle you're plastering all over the internet. And no, this isn't a joke. It's a very real intelligence tool that's already helped them find millions in undeclared income. Wild, isn't it?
Secret way number 9 isn't about data or AI. It's about people. HMRC has an anonymous hotline, and it gets thousands of tip-offs every single year. We're talking neighbors, ex-partners, maybe a disgruntled former employee. Just last year, these kinds of tips launched over 12,000 investigations. It's the old-school human element, but it's still incredibly powerful. And that brings us to the final, and without a doubt, the most powerful secret weapon in HMRC's entire arsenal. You see, this isn't just about what you've done in the past. This is about predicting what you might do next.
Meet HMRC Connect. It is a terrifyingly powerful AI system. It crunches over 35 billion data points from every source we've talked about and a whole lot more. It cross-references everything: your bank data, your payroll, your property records, your social media, even the average earnings for your postcode. It then gives you a risk score. If your spending habits or declared income create an anomaly, the algorithm flags you for a review before a human being has even seen your file. It's predictive, it's powerful, and it is the engine driving modern tax collection.
So, after hearing all of that, it's pretty easy to feel a little bit overwhelmed, maybe even a bit worried. But please, the most important thing is this: don't panic. The key here is to get proactive. Knowledge is power, and now you have it. Here's a really simple 3-step action plan for you. First, just take a moment and review all your sources of income against the 10 points we've just covered. Be honest with yourself. Second, log into your online personal tax account and double-check that your tax code and income summary look right. And third, if you have any doubts at all, just get professional advice. Making sure you are both compliant and as tax efficient as possible is, without a doubt, the smartest move you can make.
And of course, that's where our guides for today, Pro Tax Accountants, come in. If any of this has raised a question for you, or if you just want that peace of mind knowing your tax affairs are in perfect order, they are the experts to talk to. You can reach them directly on WhatsApp or by phone at 07985 689912. Or you can just send an email to info@protaxaccountant.co.uk. And for more expert tips just like this, make sure you subscribe to their YouTube channel. Thanks for joining us today.